Hey guys, welcome back to the channel. Today I wanted to make a video on HMAX. It is a relatively brand new ETF here in Canada. As we see, it's came out January 20th, 2023. So I am a little late, but better late than never. This is Hamilton's Canadian Financial Yield Maximizer ETF. You guys might recognize this as I made a short about this, but I want to make a little bit of a longer form video on this one. So it is at 13+% yield. And the reason why this one is very appealing is because it's Canada's highest yielding financials. So basically what that means is it's more aggressive on the Canadians financial side. So this is primarily the banks, as we know that here in Canada, the main sector for their strongest performing companies are the financials. And so yeah, that's why this one is very exciting. You see 13+% in target yield, highest yielding Canadian financials ETF, and diversified exposure to Canada's 10 largest financials with approximately 75% exposure to the big six banks. So if you don't know, the big six is referred to TD, RBC, BMO, CIBC, and then Scotiabank. An active covered call strategy to enhance monthly income and reduce volatility. Current coverage is approximately 50%. So these are more aggressive cover call ETFs. So this ETF will be more aggressive as the 13% target yield. So it's a great fit for investors who want higher monthly income, blue chip Canadian banks and financials exposure, tax efficient distributions, and reduced volatility from the option strategy. So the fund's objective is designed to provide attractive monthly income while giving exposure to the market cap weighted portfolio of Canadian financial services stocks. So this is to reduce volatility and augment dividend income. HMAX will employ an active covered call strategy, and there is no leverage in HMAX. So it's crazy to me to think because if HMAX did use leverage, we're sitting at 13% right now, so this would be even higher if it did. But it even without it, 13%, it's pretty aggressive. And yeah, this is a great financials ETF. And yeah, as you see, 13 plus. And this is the graph that I mainly want to highlight here, the higher yield. And so Big Six average, the dividend that they pay is 4.59%. And Canadian Banks covered calls ETF average here is 7.82%. And then we see HMAX with 13 plus percent. This is massive. And what makes HMAX different? Many covered calls ETF write in options on 30 to 50% of portfolio out of the money. HMAX is able to provide higher income with a dynamic covered call strategy, currently writing on 50% of the portfolio at the money. So this is a bit more aggressive. That's why we have a higher yield. And this allows HMAX to generate higher option premiums while maintaining the 50% upside potential. So you do have some upside potential here with this one. And yeah, here we see the sector allocation. No surprise here. The banks make up 76%. So if you are looking for some Canadian banks exposure, this is a great one to pick up. Got insurance companies 14.9%, asset management making up 10%. And yeah, here we see the holdings. We got Royal Bank making up the most at 23.1%. We got TD at 20.5%, BMO 11.5%, Bank of Nova Scotia 10.5%, Brookfield Corp, which is one of the asset managements at 10%, Canadian Bank of Commerce, CIBC 6.7%. And then we got some the insurance companies here. So MFC 6%, Sun Life 4.8%, Intact Financial 4.1%, and National Bank of Canada 4.1%. All right, so we do see here assumption date January 20th. Investment style covered call, assets under management 84.7 million. So it is growing relatively quick, I would say. Distributions, monthly basis, that's what we love to see. Rebalancing semi-annual, management fee, I think that's fair. Risk rating medium. And yeah, we'll go over to the fact sheets. So yeah, here we see the fact sheets. This is taken from January 31st, 2023. 23. Whoa. And Hamilton Canadian Yield Maximizer ETF. A little bit of a mouthful, but this is a great ETF regardless. And yeah, as we see here, the pictures, the big six banks, asset management and the financials, they're the insurance. Get more with covered call, reduce volatility, higher income, and tax efficient distributions. And yeah, this is one that I'm really excited about. And if you do like HYLD, I recently made a video on HYLD. HMAX makes about 11% of HYLD. So if you're like me who loves HYLD, you're getting some exposure to HMAX in that one as well. And yeah, that's it for today's video. Hope you guys enjoyed this one. Make sure to like and subscribe for more dividend income investing related content, as I'm really enjoying making these videos. I love the support in the comments. And yeah, with that, guys, take care.